What's up, you guys? It's Nick here. I have a really interesting point of view about market crashes that I believe will greatly benefit you if you listen to it. So, as a trade for this really free and useful knowledge, could you please smash the like button so that the YouTube algorithm can help promote my videos to reach more great viewers such as yourself? Alright, so you're probably wondering why I'm not worried about market crashes, and I'm going to tell you why. But first, let's learn a few reasons why they happen in the first place. Market crashes, generally speaking, happen under these three circumstances. The first of which is prolonged period of rising stock prices. Another reason why the stock market might crash is because of excessive optimism about the short-term future. Oftentimes, this does lead to disappointments. The third reason why a market crash can happen is because of a large gap between the current price per earnings ratio versus the long-term average of it. When the current price per earnings ratio is far above the long-term average, this is a telltale sign that there's going to be a correction in the short-term future. Let's go over one of my favorite ways to tell how a market crash is coming along. This is a scary but absolutely true map of our current market's valuation. It's called the Buffett indicator, and it has never been wrong. I'll be explaining the Buffett indicator in my very next YouTube video, so if you aren't subscribed yet, do it so that you do not miss it. That's a valuable lesson of its own. The first reason that I'm not worried about market crashes is because I follow the famous investing motto, buy low, sell high. Market corrections and crashes offer a unique opportunity to buy stocks at excellent discounts. This gives me advantage of a full recovery, plus whatever the stock had to offer in the first place. This typically means that I get far above average returns. Out of all the investments that I've ever done, Carnival Cruise Line is one of my top performers. And the reason why is because I bought it during a market crash. Let's look at the details of my purchase. I bought Carnival Cruise Line shares at $19.5 because I recognized it was extremely undervalued at the time. The coronavirus has kept most, if not all, cruise ships docked until April. This is all the time I need to buy up a bunch of shares before their business resumes to normal levels. By summer 2021, many families will be aching to go out on vacation after being restricted from leaving their homes for over a year. This sudden influx of people going on vacation could actually cause a rebound that goes beyond its pre-COVID levels. If you don't believe me, look at the stock market indexes such as the S&P 500. It's already past its all-time highs, even with the coronavirus pandemic being at its worst only a few months ago. What this all means for me is that I can quite reasonably expect a high rate of return on my investment. The second reason why I'm not worried about stock market crashes is because in the long term, it almost always goes up. Specific stocks such as GameStop or AMC had an absolute reversal in February. But as I said, almost all stocks go up over time. During April of 2020, were you worried that the market would never recover from the coronavirus? If you thought that, that's the wrong way of thinking. Do you really believe that the market won't recover after taking a look at the last 50 years in the S&P 500? It grows because humanity grows. Our intelligence and creativity has been the cause of hundreds of world-changing businesses to rise. In the long term, the market laughs at crashes. They mean nothing to the long term. This is why I don't mind buying stuff too early or too late, because 10 years from now, I'll be winning a bunch anyway. So it doesn't matter at all. Warren Buffett, an absolute legend in the stock market, says in his famous quote that time in the market always beats timing the market. So what does this mean for people like you and me? Well, to me, it means that in the short term, you can't really predict anything with the market. You can't expect it to go up or down or anything. It's just not able to be done. But in the long term, humanity is growing. Actually, since the start of this video, 43 people have been born. You know what that means? In the next 20 years, those 43 people are going to be consumers. They might be producers. They're going to help build the economy even more. This means that we're in a cycle of growth. And guys, this isn't just growth, it's exponential growth. And guess what? It only gets faster because over time, there's more consumers, which means that there's more buyers, more sellers. The economy grows faster every year on average than it ever has before. So guys, the main lesson that you can take out of this video is that you can buy when the market is down. When the market's down, it's an excellent opportunity to buy at a discount. When you buy stocks at a discount, you get the spread of its return to its original level, plus its growth in the future. The lower you buy, the higher you win later on. That's how you're going to win the biggest in the stock market. I really hope you guys learned something today from the video. If you did, please smash the like button and also consider subscribing. It really helps my channel grow and I'd appreciate it. Make sure you apply this the next time you see a stock on a downturn market. It might just be your next great opportunity. All right, guys, have a great one. See you next time.